you.
Hi guys, welcome to Money Control. I'm Karunya Rao and with me is Manisha Gupta. We're here to give you an update on what's happening in the commodity space. Before we delve deeper into other other items, want to understand what's the latest on crude because that's the hot topic.
It is and continues to be so. You know, Karanya, very interestingly, I've been talking to a lot of people in the international markets and they tell us that the conventional liquidity in the crude markets is now absent. You don't have those usual hedge funds and money managers managing on where the crude prices are headed. The volumes are low, the open interest is also shrinking, and it is machines and algorithms really trading it. So that really is the case. When you see, when you see $4, $5, $6 of a movement coming in a day, experts tell us it's not us in the market right now. We are not trading this. It's not the fundamentals. When these markets settle down is when we will come back. So as of now, what we are seeing, the kind of volatility is mostly machines is what the markets are talking about. I mean, that is a raging debate right now.
So is it true that tech will finally,
take over?
Take over and run the show?
Oh,
That's
well,
what's happening
CTM,
in the
algorithm trading is all I'm hearing in the markets right now. You know, and somebody was giving me an example. Yes, there are fundamentals. Nickel gained up because there was a strong fundamental there, but nothing tells you a 250% of a jump up in 2 days. This is not something you and me will be trading. We understand fundamentals. It doesn't make a price run like that much. So when you see 250% of a jump up in 2 days, it is majorly machines. When you see a negative crude prices, yes, there were strong fundamentals in 2020, but when you see a minus $37, it is machines in some sense because people don't trade like that, and that's exactly the kind of phenomena that we are seeing.
But as far as the crude market is concerned, we know that US and several other countries have imposed a ban on Russian imports, but EU is still mulling over, is it?
And looks difficult with the kind of statements that we are hearing from Hungary, Bulgaria, Netherlands and Germany, and these are the most important countries within that 27 nation European Union. And if these countries do not want it, the kind of dependence that they have on Russia, if they are not convinced about this, I don't think we are seeing a ban on Russian oil and gas because 40% of gas dependency is on Russia, 27% oil dependency in European Union is on Russia, and those are very big numbers.
And the discounts that they're offering.
Oh yes, and
compelling.
Also, absolutely. So I was talking to Citi yesterday, and they said that it's not all lost, by the way, because Russia is still producing crude, and that is going to storages, and you don't know who's picking crude from those storages. India, they say, is a known thing. We know IOC and BPSCL are picking that crude. They have long-term contracts for the month of May and June. Those numbers are out and open. But what other countries are buying in what names and where is it headed? And there are ship-to-ship transfers also happening of Russian crude. So there is just so much happening in the international markets, and I think the crude is taking it all in.
What about metals? Fitch had come out with a report where they've raised metal targets. So which are these various metals that are likely to do well?
So I think they're most bullish on aluminum, copper and zinc. Nickel not so much, surprisingly, and nickel market is slightly broken the way it has been. The volumes are very, very low onto that until it really settles down. But their favorite metals continue to be copper, nickel, copper, aluminum and zinc. They expect these prices to run up, but even more important is, and you and me have read that Fitch report, so while they have increased price targets for this year, they have downgraded, and when you look at 2022 and when you look at 2023, you know that the prices are headed lower. One, they don't see the Chinese demand to be very strong. They expect the European Union growth to slow down as well. And at these higher prices, they also are expecting the production to start reacting to these higher prices. So we are looking at higher supplies and okay of a demand.
So 22 will be the peak?
It will be, yes.
So good time still to buy or buy on dips?
I think buy on dips, buy at these current levels. We still are looking at stronger demand coming in. But will these prices continue to stay in the next year as well? No.
That's something to watch out for. But what metals are you liking? I mean, going by your own assessment, what's happening in the market?
You know, I was asked a month back.
Don't say gold again.
I'm gonna say that. What metal are you? And I was like, nickel. I am nickel. The way it was running up, but that's not the case. As I said, it's a broken market right now. But the metal that really seems very strong on its feet right now is aluminum, because we are looking at supply disruptions actually happening on ground. There's a big global deficit we are working with, and with the kind of numbers that we saw in December, Jan, and Feb tell you that as compared to last year, these months have had a lower output, and the demand is stronger. I mean, you've seen it from can makers, automotives, plane makers, packaging. Aluminum is used in a lot of areas.
So who are the big producers in India?
You have Nalco, Hindalco, Vedanta in that sense, and I think all of them are laughing their way to the bank.
Absolutely. Well, thank you so much for joining in with a big update on commodities. Metals once again in focus. Crude remains hot. So these are the updates from our end. Thank you so much for tuning in.